Good morning, everyone. Welcome back. Today, I will analyze Etsy. For analyzing equities, I will use a 6-step valuation process, which consists of the step shown on the slide. Additionally, the DCF model used for the price target will be available to download in the description below. So what is Etsy? Etsy is an e-commerce platform with 4 marketplaces. Etsy.com is the primary marketplace where it connects millions of buyers and sellers around the world, focusing on unique, handcrafted products. Over time, Etsy acquired Reverb, which is one of the main marketplaces to buy music gear. Additionally, it also has Depop, which is a fashion resale marketplace, and Elo7, which is a Brazil-based marketplace for handmade, unique products. On this slide, we can see Etsy's flywheel of value creation. This flywheel is common in an e-commerce platform, and it highlights the importance of the dynamics of the two-sided marketplace, where buyers and sellers both need to grow together to create value, and how one helps attract the other. For industry analysis, it is important to understand the dynamics of the e-commerce platforms. Some of the most notable competitors of Etsy are Alibaba, Amazon, eBay, and Shopify, which are big players in the global e-commerce landscape. For e-commerce, growth and profitability is super important, and as you can see, Etsy has a higher revenue growth than its competitors. It has a high gross profit margin of 70% with a high return of equity of 73%. Additionally, Etsy has a high institutional percentage ownership, which shows institutional trust in Etsy's management and future prospects. For competitive advantages, Etsy has a lot. It has economies of scale from entrenching buyers and sellers on their platform, where the switching costs for sellers increase the longer they sell on the platform. Additionally, the goods that are sold on Etsy create a niche, which leads to a high retention rate. Secondly, Etsy has a lot of technology applications in the marketplace that help drive engagement for both sides. Etsy also has a good brand loyalty, and the bigger they get, the more recognition Etsy will receive, and the easier it will be for them to attract buyers and sellers. Fourthly, a key strategic advantage that I personally really like about Etsy is their expansions in core geographies, where there is a large GMS and where it is easier to get established. This shows focus and sticking to a working business plan, and it allows Etsy to focus on advertising effectively. Finally, Etsy is a very geographically diversified company where 42% of Etsy sellers are outside the US, allowing Etsy to expand in those core geographies more easily. Etsy's CEO is Josh Silverman. He co-founded Evite, managed different digital marketplaces such as shopping.com and marketplace.nl. He was the CEO of Skype, and now he's Etsy's CEO. Therefore, he has a lot of experience in managing digital marketplaces with a good track record. The financial situation of Etsy is healthy. They have a cash and cash equivalent of $1 billion with a total debt of $2.4 billion. They have a debt to equity ratio of 4.11 with a quick ratio of 2.28. So there are low risks of insolvency since almost all of the debt is long-term debt. However, I would like to see a lower debt to equity ratio in the future, especially as the interest rates are rising. Overall, Etsy's balance sheet is healthy. There are 5 main risks with Etsy. The first one are the macroeconomic factors, specifically inflation and the recession. They will hit the economy and Etsy will be affected from it. The second are the execution risks. 2021 was a phenomenal year for Etsy, as COVID showed the real power of e-commerce platforms. Therefore, if the growth slows down, multiples will contract. Thirdly, if Etsy's brand gets ruined, it will be expensive to get the buyers and sellers back. And if the flywheel starts rotating backwards, it could destroy the company. Fourthly, if they expand in a new core geography and it fails, they will lose a lot of investments. Therefore, these risks increase the further Etsy goes from the US. Finally, Etsy has a high switching cost for sellers, but a low switching cost for buyers. So, staying competitive and attracting more and more buyers year after year could get expensive and difficult. The price target from the DCF model is $181, and as a reminder, the DCF model will be in the description below to download for free. This is my Etsy 5-year DCF model. This model yields a value with a perpetuity approach of $154, and with an EBIT approach, I get a price target of $208. Using the average of $181, it gives an upside of around 70%. The inputs used to reach this value are: I extrapolated the marketplace revenues and the service revenue, being conservative with an average of around 18%. I also extrapolated the cost of goods sold, depreciation, capital expenditures, and net working capitals for Etsy. These inputs will create these values in 2027. And using a 21% US corporate tax rate, a discount rate of 10% with a 5-year long-term perpetuity growth rate, I get the perpetuity approach value of 154. And using a 22x EBITDA multiple, I get the EBITDA approach value. In conclusion, Etsy is in a good financial position. It has a strong management with a good business strategy and a good track record. Etsy has risk, but it has a high upside, especially if the price is under $100. So check risk and reward for you, but personally, Etsy under 100 is a good time to start building a long-term position. But again, as a disclaimer, this is not financial advice, it is an analysis to give a new perspective for a specific equity. If you reached the end of the video, you're awesome. And if you enjoyed, please like and subscribe as it will greatly help and support the channel. Have a good rest of your day, and I'll see you next time.